I think we will both agree that things are pretty screwed up. We'll all agree, right? What is really screwed up is the world is massively in debt. The workforce is shrinking. Population growth is slowing down. It's slowing down GDP growth, so there's not enough GDP growth to pay or service the amount of debts out there. And what we found since 2008, that the answer to this debt issue has been printing of more money, debasement of currency. People think of it in terms of, at first they think it's going to be inflation, as in the price of CPI goes up, but it's actually not. It's actually something much worse, is wages don't rise, but assets go up, because optically you're debasing the currency. Your future self is getting poorer because assets are all about storing wealth for future deferred consumption. But what's happening is you can't afford as much of that now. And so your future self is in fact poorer. So a classic example is a 35-year-old now in the United States, getting married, having kids. A house is very expensive now. Compared to when Peter and I were young, it was relatively cheap, 3 times incomes. Now it's like 10 times incomes. So there's no real way of getting up the ladder. The equity market is much more expensive. Your kind of percentage share of the S&P is so much less. So the advantages that your parents had are not available to you. So that's a problem for society overall, is this issue of debasement of currency. The governments are doing it because there's no way of paying the debt. So what you're going to have to do is continue to print money. So then, if that is the case, and I found out in this everything code analysis that I've talked to you about, what we found is since 2008, they reset interest rates. It's like a debt reset. The debt jubilee happened. It was everybody was given the chance to not pay interest. And everybody reset their debts on this 3 to 5 year time horizon. And so 4 years is the middle, and we've got this perfect 4-year cycle. All assets are now incredibly correlated with this cycle. Whether it's emerging markets, whether it's the dollar, whether it's rates, whether it's crypto, whether it's gold, whether it's equities, everything. So if we've got a super correlated environment where asset prices keep going up because of debasement of currency, i.e. the optics, because the value of the currency is going down, then your job is to find something that offsets it. So the rate of debasement, by my calculation, is about 15% a year on a globalized basis. So your hurdle rate is 15%. Now, equities have done something not far off that, but that just means you're not actually making any money. You're actually just standing still. NASDAQ, which is in a secular trend, has actually beaten that 15% hurdle rate somewhat. So it's actually helped. The traditional way of doing it would have been gold. And I've been a long-term gold investor, I've always liked gold, but gold has not done particularly well in recent years against debasement. On a globalized basis, it still works beautifully well as a global currency. And against global debasement over time, it works. But the really strong debasement we've been having in recent years just hasn't done well enough. And many of us from the macro world started thinking, okay, we need to find, what is this hedge? What is the right way of doing this? And that's where crypto, which I've been involved in for a long time, started to really fit in here, because it offers a bunch of ways that the financial system can use it in an overly indebted system, where you've got a collateral and then like 30 uses of that same collateral. So nobody owns anything. You own a fraction of what you think you own in an indebted system. Same with a bank. You have money in a bank, it's not your money. It's actually the bank's money, and that's been proven time and time again. Bank bail-ins in Europe were particularly bad. So we've got a broken financial system, and the blockchain rails are something that's actually very useful. We can figure out who owns what at any point with instant settlement. So it reduces a lot of the risk of the settlement layer, but also you gave the rise of cryptocurrencies, which also have this supply and demand dynamic that's interesting. There's a limited supply, and it has the properties somewhat of digital gold. And that's worked very well. If you look at that, because you've got this technology adoption of the blockchain, plus this store of value or this collateral layer, it's massively outperformed everything. So it's been a phenomenally good asset, even with these massive drawdowns en route. We have enormous drawdowns, monstrous, and still it's the best performing asset in all recorded history, almost on any time horizon. So it makes it very difficult to allocate any money in anything else. And that's why I've struggled. I just do every chart against Bitcoin or every chart against the Fed balance sheet and try and say, okay, well, what goes up? Gold has actually gone down versus the Fed balance sheet. I think that's more of a temporary state of affairs than a permanent state of affairs. Again, I'm actually not an anti-gold person whatsoever. I just think when you've got technology plus gold, call it that as a narrative, you're always going to do better. And in our job to help people navigate this journey, if you're 65 years old, gold does a great job for you. If you're 35 years old, you ain't going to get anywhere. You have to gain wealth, not just protect wealth, because you don't have it when you're young. And that's the difference here. This is the core difference to me, is there's a suitability factor for different types of people. And you're trying to solve different problems.
Well, I agree with Raoul that inflation is a problem. Unfortunately, it's the path of least resistance for politicians to go down. It's the way they finance their spending. It's the way they buy their own re-election. It's the way they avoid having to be honest with the electorate and tell them the truth about how broke they are. And it's really a hidden tax. It's instead of taking your money by taxing you openly and directly, or even indirectly through a sales tax, they surreptitiously rob you of your purchasing power by just creating money out of thin air, usually with a complicit central bank, and then they spend that into circulation. And that drives up prices, whether it's goods prices, asset prices. But what's happening is the value of each monetary unit is going down as more of them are spent into circulation. And that's going to continue. In fact, that's going to accelerate based on the fiscal predicament that we're in, based on the demographics. Certainly in the U.S., we have the baby boom. I'm one of the younger baby boomers, born in 1963. 1964 is the end of it. But I'm 60. I'm going to be 61 in March. Right? So I'm theoretically 4 years away from cashing or collecting Social Security. But there's a lot of people in my generation. There's not a lot of people in the generations that follow with the ability to make good on these commitments. So the Ponzi is imploding. So inflation is basically, that's what they're going to do. Now I think that they're playing with fire here. I think politicians and central bankers probably think they can control it, and it won't run away from them and turn potentially into hyperinflation. And I wouldn't be so sure. I think a lot of politicians have overestimated their ability to keep that genie anywhere near the bottle once it's out. So I think there's a lot of inflation, and so it is a problem that you need to deal with. But I don't think the solution is to invent a make-believe asset and then all pretend that make-believe asset has value because of some artificially imposed constraint on supply, and ignore the fact that there's an unlimited number of other cryptocurrencies that exist that, for most practical purposes are actually better than Bitcoin. They're cheaper to use, they're faster to use, to the extent that you want to use Bitcoin, which nobody does because it's not a very good cryptocurrency. It's certainly not a store of value, but it's not a good medium of exchange or unit of account. There are plenty of other cryptos that actually fit that bill better, to the extent that somebody wanted to use them for that purpose, but they don't. Everybody uses a crypto to gamble. That's the main use case. And in fact, that's what's happening now with these ETFs. The ETFs have simply provided yet another way to gamble on Bitcoin. And it's ironic. Now you have all these people buying Bitcoin through a third-party custodian who's charging a fee. You're getting everybody back into the very financial system that they were supposed to be leaving. And I keep hearing these people on television say, well, it's so hard to buy Bitcoin, it's so difficult, and this makes it easy, now everybody can buy it. I thought everybody could buy it before. The beauty of Bitcoin was supposed to be it was so simple and easy. You didn't need a third party, you didn't need a custodian, you didn't need storage charges. So It's all they're doing is now trying to convince Wall Street to buy this asset, which has no fundamental value, has no income, has no earnings, no nothing. But as long as we keep buying it and nobody sells it, well, the price will keep going up, and we can all operate under the delusion that we're getting rich as long as nobody tries to get out. And everybody keeps pretending that they've got all this money because on paper, they've got something. But, it's going to be very different when people try to get out. And I think it's going to be very noticeable with these Bitcoin ETFs, because I think a lot of the money that's going into the ETFs is trading money. I think a lot of it came out of gold stocks. I mean, if you look at what's happened in the last week or two, gold stocks have been clobbered. Even though the price of gold is unchanged to slightly higher, you've seen 10-20% drops in big gold stocks. I think maybe they've been selling them to put money into Bitcoin ETFs. But I don't think that money is married to those ETFs. I think it's there for a trade. A lot of people might even have stops beneath the market looking to get out if the market turns. But I think people are going to find it's a lot easier to get money into these ETFs than to get it out. I think it's just going to go to money heaven. Because, when we've had these big drops in Bitcoin before, what tends to happen to stabilize the market is all of a sudden there's a bunch of tethers out there, and Bitcoin gets bought using fake dollars. But when these ETFs, when people who own the ETFs sell, now the ETFs take the Bitcoin that they own and they sell them on the market, they can't get tether. They need real actual dollars to return. They can't send the shareholders tether. So there could be just a real vacuum. You saw like a little blip yesterday. I think Bitcoin dropped from 63,000 or 64,000, wherever it was, to under 59,000, $5,000 in, I don't know, like 30 seconds. And it came back, but I mean, it could drop a lot more than that in 30 seconds or a minute, and I think it will. Maybe there's some trouble. We'll see. A lot of these Bitcoin mining stocks in the last couple of days have been clobbered. I don't know, what's special about them, but they've dropped substantially in the last couple of days. So we're starting to see some resistance here and some of these names buckling. But this is just, to me, it's a speculative mania, and this is not the answer to the problem. People are creating a whole different problem with these crypto tokens. So I wanted to say, so it's not like I'm anti-crypto or I don't see value in crypto. It depends on what you're talking about. So if you're talking about blockchain, if you're talking about the potential to use a cryptocurrency actually as a medium of exchange and a unit of account, which would mean it would be tied to something with value, stable coin. Obviously, if you tie it to something like the dollar or the euro, you don't have the real long-term store value. You don't have an inflation hedge, but you do have a medium of exchange. You have a unit of account. I think the ideal marriage is between gold and blockchain. If you tokenize gold and put it on a blockchain, you can have a medium of exchange and a unit of account, but you actually have a real store of value. You have something that is a superior monetary instrument to any of the fiat currencies that are out there. And it's far superior to Bitcoin, because once you tokenize gold and put it on a blockchain, the transactions are faster and cheaper than the transactions with Bitcoin, but you have a real commodity that can store value. See, when people try to say, well, Bitcoin is, it doesn't work as a currency, but it's a great store of value, it's a lousy store of value because there's no value. You have to have value before you can store value. Bitcoin has a price, and people confuse price with value. You can put a price on anything. It doesn't mean it has any value. It just means that somebody wants to buy it. But they may want to buy it for all sorts of reasons. People want to buy Bitcoin because they think it's going to keep going up. It's the greater fool theory. I'm going to buy it because somebody else will buy it and pay more. But that doesn't work. Eventually it collapses, and you can't store price. You can store value, and sometimes price can be very low, and there can be good buying opportunities. You can get a good deal if something of value has a low price because of the market at that moment. But Bitcoin only has price. It has no value, and so it can't be a store of value. And just because some people bought it and got rich, and Raoul maybe made a lot of money in Bitcoin. I mean, I know a lot of people who did. I'm here in Puerto Rico with a lot of Bitcoin whales. There are a lot of guys here that got into Bitcoin, Ether, or you name it, early on. And yeah, they made a great trade. They got into it when nobody was buying it. They put a big money on it, and it went way up. But the majority of the people who own Bitcoin are not making a lot of money in Bitcoin. I mean, Bitcoin, yeah, it's back up to 60,000, but it was at 60,000 3 years ago. It's had a roller coaster. It went down below 20,000. Now it's back up. It's kind of been moving sideways over the last few years. So it hasn't, done anything as far as kept up with inflation over that time period. Yeah, if you bought it a year ago after it dropped and you sell it now, you have a good trade. But if you rode it all the way down and all the way back up, you haven't made anything. And of course, if you don't sell it and it goes right back down, and there's no way to know, let's say Bitcoin collapses again from the 60,000 level, just like it did a few years ago, it may not stop at 19,000. What if it goes to 10,000 or 5,000? Who the hell knows how low the next drop is going to be? And maybe after that happens, they manage to get the price back up again, and then it collapses, and eventually it collapses and never comes back. So I think people who are getting out of the dollar or the euro and buying Bitcoin have jumped out of the frying pan into the fire. I mean, so you don't have to reinvent the wheel. If you want to get out of fiat currencies, you can own gold. But you could also own other good inflation hedge assets, real assets. Most of my money isn't in gold either. I put a lot more money into gold stocks personally in the last week because I just thought they were giving them away. And so I wanted to buy more. But I have a lot of assets around the world that I own. I own shares of businesses that generate a lot of income, selling products, providing services that people really need and that people will pay higher prices to get. And those companies pay me lots of dividends. And as inflation, drives up prices, those companies increase their prices and pay me higher dividends. And I own real assets that are not losing value. I own the property, the plant, and the equipment, the IP, whatever these companies own that are tangible real assets. If I'm a shareholder, I own a piece of those real assets. And you can own, real estate, farmland or, land where, you can grow trees or mine metals, real land, productive land, or you can have, lands with factories on them or things like that. People own, residential real estate now or commercial real estate, depending on where that is. Some of these markets could have some problems in the near term. But real assets are something that you want to own when inflation is the concern and likely to get worse. You don't want to own paper. You don't want to own bank deposits. You don't want to own annuities. Things with a fixed income, cash value, and an insurance policy. Muni bonds. These are all the things that lose value. Inflation taxes those assets. And what inflation really does is it transfers wealth from creditors to debtors. So the debtors get their debts wiped out and the creditors see their assets wiped out, their savings. And, the biggest debtor in the history of the world, maybe even the history of the universe, as far as I know, is the United States government. And so the United States government is the main beneficiary of inflation, and clearly they're going to create it. They create inflation because it suits their purposes. The only problem for them now is they've got this national debt with such a short maturity that they're in the predicament where, if interest rates go up, which they should, they're in a huge problem because they can't pay, which means the Fed has to play an even important role in monetizing that debt, which is why the risk of inflation running away is so great.
That because still gold is a very physical asset, as Peter rightly says, and to move it around the world is difficult. So you're moving claims around the world, even on blockchain. Now, as far as I'm aware, the Macau exchange for gold is going to tokenize. There's a bunch of people tokenizing gold. We've seen gold things. Great. It's maybe a more efficient settlement rail or an ownership rail, but it's not instant transfer of the actual asset itself. If I transfer you a Bitcoin, it goes straight into your Ledger wallet, let's say, and you own it. It's yours. It's self-custody. Gold is more difficult to self-custody just because of its size. Now, many people around the world do self-custody of their gold, and that's fine too. Again, I don't have an issue, but in a world of 8 billion people where we live on the internet, it actually is nice to have an asset, and Peter's absolutely right. We've memed $1 trillion currency into existence. We've memed it. It's just human narrative. But guess what? So's gold. So is everything that we do, including religion. Everything is a meme. Memetics rule the entire way that humans understand the world around them. And because we believe something to be true, it is true to us. So we believe that this digital asset that is scarce is valuable. Peter's right. There are other blockchains that are much more effective, and by owning those cryptocurrencies, they're not currencies, and this confusion over there's all these cryptocurrencies, they're all competing against Bitcoin. They're not. These are networks where you own a tokenized part of a network, and the network generates fees, you make money. It's like owning shares, essentially, but somewhat different. Bitcoin itself is because we believe it to be true. It has the sorts of properties that we as humans think of as holding value, as does gold. Certain other things don't. Paper physically doesn't, right? Even paper money, but paper itself, it destroys. Copper over time destroys. Silver over time erodes, but gold doesn't. So gold has this long-term value. In a digital world, those properties have been mimicked, but even honed down to a way that everything is knowable. In gold, well, when the price is high enough, the gold price becomes cyclical because the miners will find new ways of getting gold out of the ground. And so supply adjusts and brings down price, which is fine. In Bitcoin, you can't do it. So it's really a function of demand in everything in Bitcoin. So it's the function of how many people believe this to be true, that this asset has value. And when you go back and say, well, people shouldn't do this, nobody has the right to tell people what they should or should not do. This is the best performing asset the world has ever seen. It is up 6 million %. Since we first put it on Real Vision in 2014, it's up 380,000%.
Wow. You know, if Bitcoin is 1,000 10 years from now, you could still make the argument it's the best performing asset in the world if you want to start from that point in time. So it doesn't matter. The people didn't own it when it was pennies.
That's a little bit disingenuous because it actually is the best performing asset in the world on a 10-year, 5-year, 4-year, 3-year, 2-year, 1-year basis.
Well, it can't be on a 3-year basis because it's about unchanged, right? It was at 6. It was over. It's record
You're
high.
You're taking
about 3
the
years
all-time high as the yardstick, right? 3 years ago was March 2021. It was much lower.
Well, when did it hit 60, 65, 69,000? When was that?
Like November 2021.
All right, so from that point. But yeah, I mean,
okay,
it
so
just
we can
made
take
a big rally.
Peter,
Bitcoin is up 40% in the last few weeks. So obviously, everything looks like a valley when you're up on this hill.
Question is, has Bitcoin performed very well over its lifetime? The answer is provably, mathematically, yes. That's okay. Doesn't mean you have to like it. Doesn't mean you have to like it, but it's provenly gone up more than any other asset.
Look, let's see what happens when the people who own it want to get rid of it and do something with it.
It's been around
Peter,
it's been around 14 years. We've gone through 4 cycles where it's gone down 90%, and it still is the best performing asset. So your oh my God scenario goes down 90%. I've gone through 3 of those myself. It still doesn't.
All right, well, you're going to go through another one, and it may not come back next time. But the point, I want to make a couple of points that address what you said. So I agree that it is easier to store Bitcoin. I don't know. Obviously, we don't need these ETFs. That's just the manufacturer to try to pump up demand. But yes, it's easy to store your Bitcoin relative to gold. But the difference is when you're storing gold, you're storing something. And so since you have something, it takes some effort to store it. When you're storing Bitcoin, you're storing nothing. So what good is the fact that it's easy to store nothing? Yes, I've got a very safe, secure supply of nothing. And Bitcoin, though, as long as people think it's going to go up, as long as they maintain that delusion and more people want to buy it, sure, it will have a price. And if enough people don't sell it, then some people can, right? There are always going to be some people who can get out.
That is the nature of all investments.
No, it's not. No, it's not. When you talk about gold, gold is an actual commodity that is used.
It does what?
In industry. It's used.
How
it has
much,
properties
what
that
share,
are important.
What share of gold usage, of gold that's mined, is actually used in manufacturing?
No, about half of it is used in jewelry.
That's jewelry. That's just storing of gold on your physical body. How much is actually used?
No, that's used. I got a gold watch here. I didn't buy a tin watch.
And why did you buy a gold watch? Because you want to wear gold.
Because because I can go swimming with the watch. It doesn't rust. It looks beautiful. It lasts.
It scratches.
Wearing their Bitcoin, they're wearing something that has Bitcoin written on it. You don't need the Bitcoin. If you want a gold watch, you got to have gold.
Actually, that's not true, Peter, because if you have an inscription on Bitcoin, like a Bitcoin ordinal, which is an NFT.
Yes, I know what those are. I created some myself.
And they are stored on the blockchain. You actually need Bitcoin for it to exist.
Yes, you need a Satoshi.
So
yes, you need
when you look at on Twitter, I have my CryptoPunk. That actually is also a claim on Ethereum.
Yeah, all right. You know, but it's all part of the speculation of Bitcoin. It's not about wearing your jewelry. But again, gold is a conductor of electricity. It is the best conductor we know. It's the best conductor we have. It's used for all sorts of things in electronics. It's used in medicine. It's used in dentistry. It would be used more if the price was lower, but the price is high. But the reason that the price is high is when you own gold, you are storing the future use of that gold 1,000 years from now. Somebody could use that gold to conduct electricity. You don't know what they're going to use it for. I talked about this telescope that we sent into space, this Hubble telescope, and they had to coat these huge mirrors with gold. Now, that was very expensive. They didn't want to coat it with gold, but that was the only metal that was going to work. So they had to buy gold to coat these mirrors. So when you own gold, you own all those properties. Those properties are not going to go away over time, and you're storing them for future use. Bitcoin doesn't have anything that anybody uses for anything. I mean, as long as people want to gamble on it, there's a price. But people don't have to buy gold for money. There's always going to be people who need gold in industry who are going to be buying it. And central banks, yes, central banks buy it as a monetary asset because they need something to back up their fiat. They can't just back up one currency with another currency. They need something real. So central banks have been buying more and more gold. They have a lot more that they need to buy because their reserves are still too low. But you don't have that with Bitcoin. You don't have industrial demand. You don't have central bank demand. You don't have jewelry demand. You just have speculative demand. And that's very fickle. Yeah, if the market's going up, the speculators will buy. Starts going down, they're going to want to get out. But eventually the story blows up. You know, people stop believing in the fairy tale. You know, you talk about all these young kids that think they've reinvented the wheel and think that they know more than their parents or their grandparents. You know, it's like, look, you know, little kids believe in all sorts of things. They believe in the tooth fairy. They believe in the Easter Bunny and Santa Claus. You know, but they don't believe in these things for their whole lives. As they get older, they start to see the truth. And I think the same thing is going to happen with Bitcoin. People are going to grow up and they're going to learn from the mistakes of their youth. Yeah, but that argument is really a straw man because I believe in digital things. Like, you know, music. I don't have to go out and buy a record. I can listen to music digitally. There are a lot of things that I can do digitally. But just because I believe in digital, that doesn't mean that I can eat digital food, right? Food can't be digital because I'll die. If the only thing I eat is digital food, I'm not going to get enough calories and I'm going to die. I need actual food. I can't replace food with a digital image. And that's the same thing with gold. Gold is a real metal. Digital gold is not gold. It's nothing. Now, yes, if I want to, have a character and I want him to have all kinds of gold, fake gold jewelry in some video game, sure. But I mean, it's not worth that much because you can replicate it indefinitely. You don't need actual gold to have an image of gold on a computer screen. That's why, for a while they had people that were buying digital real estate. Oh, I got beachfront property. Well, who cares about beachfront property in a computer game? There's an unlimited supply of that. I mean, if you want an actual beachfront property in the physical world, that's more scarce than a digital beach, that your avatar can lie on. So it's very different. It's not like I'm not into technology. Sure, I can appreciate it, but I can't live in a digital house. I can't eat digital food, and we can't have digital gold. Gold's got to be real in order for it to be gold and do the things that gold does.
So here's an interesting thing, Tom, is in a digital world, we talked about, and rightly, as you rightly say, every day is more digital than the last. Right? That is an endless trend that we are seeing. And in a digital world, we can make infinite amounts of anything digital. And we've seen that. So stuff like email has gone from being something we paid for to something that's free. Cloud compute, everything, compute itself is exponentially declining in cost because everything digital almost goes to zero because you can make infinite amounts. So that's a real problem in a digital world until the invention of blockchain, which creates digital scarcity. It's a mathematical way to create scarcity. So scarcity is the asset. That is why gold is valuable. It is a scarce asset. That's why silver is less valuable than gold. There is more silver. There's plenty of silver. That's why copper is less valuable than gold. Scarcity is what we as humans value. And in a digital world where everything can be created infinitely, like food, in the physical world, what you need to maintain value is something. And that's what blockchain did. So that's why younger generations who live more in a digital world say, okay, this is great because I'm living in this digital world and I want it interchangeable with my physical world, and therefore I'm happy that digital assets have value, and I can think of Bitcoin as the foundational value layer for all of this. And that makes sense.
Being scarce is not enough. You have to be scarce and you have to have valuable properties that people want. And so gold has very valuable metallic properties. It's the most useful metal on the periodic table. And yeah, there's not a lot of it. So it's something that we need. It's very useful, yet it's scarce. So it's going to have a high price. I mean, something like air, we all need air, right? Air is very valuable. Without air, we die. But there's so much of it, it doesn't have a high price because there's a lot of air in the atmosphere as opposed to how much gold there is in the ground. So you could say, yes, Bitcoin is scarce, but it doesn't have any value. And so there could be one Bitcoin. If nobody wants it, then it's worthless. Right now, yes, people want the 21 million Bitcoin, but I'd rather talk about the 2.1 quadrillion Satoshis. Because when you talk about gold, in order to actually do something with gold, you need a certain quantity of gold, right? A little speck of it isn't going to do anything. You need a particular quantity to do a job. But with Bitcoin, whether I have an entire Bitcoin or one Satoshi, doesn't matter. I can't do any more with a Bitcoin than with a Satoshi because I can't do anything with either one. And so there really is 21 quadrillion Satoshis. So there's plenty of Satoshis to go around. Everybody can have a few 100,000 of these things on the planet Earth. But not only is there an unlimited supply or there's a limited supply of these Satoshis, there's an unlimited supply of other crypto tokens that can be created. More than 20,000 have already been created. In theory, 200,000, 2 million can be created that have properties that are similar to or even improve on the properties of Bitcoin. And so what? I mean, what is value about it? Yeah, people, it's all the rage now. People are talking about it. But in 100 years, will anybody even remember what Bitcoin was? I mean, Most people probably won't know about it. I mean, how many people even know about, tulip mania or stuff like that happened in the past, or Beanie Babies? I mean, these things are like fads. They come and they go. I mean, some people may study it if they study history. But to think that in 100 years, anyone's even going to be thinking about Bitcoin.
What gives you the confidence to say you're so sure? What would make you say, you know what, I don't know, this is interesting, because it's obviously people like it. It attracts a lot of investors, a lot of smart people. If you go and see Dan Moorhead or Dan Tapiero, do you say, listen guys, you guys are morons. You're just believing in something? You wouldn't say that. You wouldn't.
Well, look, there are a lot of people on Wall Street have done foolish things in my lifetime, whether it was .coms, subprime mortgages. I mean, people were doing a lot of foolish things with their money, and they lost it. And I know Wall Street has a tendency just to try to make money off of any fad. I mean, whatever's popular, there's an expression, feed the ducks while they're quacking. And that's what Wall Street does. It's like whatever the public wants, they supply it and they take a fee. And so if they could get a lot of interest in Bitcoin, then they're going to create these products and they're going to make it so that people can trade. They don't care. They're operating casinos. They're making money. But what you should think about is not, okay, maybe I'm wrong. Maybe there's a slim chance that I'm wrong. But there's a slim chance that you're right. I mean, you're betting on a long shot. The odds are it's not going to work, right? So it's a real long shot that this project is actually going to succeed, right?
Would you be less concerned about the whole thing if gold had actually gone up?
No, I mean, look, gold has gone up.
Gold mining, for example, gold mining equities have gone nowhere in 45 years.
Well, gold mining equities are not gold. Gold mining equities are not gold. So gold in the last 100 years has gone up 100-fold. So the dollar has lost 99% of its value. And even if you go back to the year 2000, gold has gone from under 300 to over 2,000 in the last 20 years. So it's just that during the last 10, 11 years where Bitcoin has been on the scene, gold has been very stable, while Bitcoin has gone way up. That's in your reference point.
Let's assume you were less fixed on your view, and you saw this new thing and saw that people also thought of it in the same kind of way that people thought about gold. And doesn't it make you go, that's fascinating. I wonder if this really could work in the digital age. But instead, you'll say, no chance, they shouldn't buy it, they're all idiots. What makes you so sure? Like, I would never say about gold, that's stupid. I would say, I understand it. Of course gold is interesting. But it's a weird way to approach it, here is literally tens of millions, if not hundreds of millions of people owning something, and you're saying, they're all morons, I'm right. Well, regardless of the performance of 6 million %, it's all just Beanie Babies. Is that really what you think?
I'm not saying they're all morons. There are people that are trading it because it's going up, and they think they'll get out before the music stops, and maybe they will.
How long does this go on for? I mean, we're 14 years in, Peter. We're 14 years in.
What you're saying is, why don't I accept that nothing is something? Why don't I believe in this fantasy like everybody else? Why am I the sane person, when you have all these insane people? What you should be asking yourself is, why do I believe this nonsense? There are other smart people. I'm not the only person.
I can hold two competing ideas in my head at all times. And it's a probabilistic game.
It's not that I don't understand Bitcoin. I understand it. That's why I know it's worthless. But there are plenty of other smart people who look at it. It doesn't have intrinsic value. It's not going to be money. And now currency is a money substitute. And currency doesn't have any intrinsic value unless it's backed by gold or something else. But then its value is derived from what backs it up. But fiat currencies, right, which we use now, have no intrinsic value, but they have governments behind them. They have laws that make them legal tender. They have a government that demands payment of taxes in that currency. So you can have a fiat system that will work. It won't work as good as an honest system based on gold, but it can work temporarily, and sometimes temporarily can be a long time. But my premise is that if Bitcoin doesn't have an actual use beyond my giving it to somebody else or selling it to somebody else, whatever, other than as a potential exchange, if its only use is I can buy it and sell it to somebody else, who buys it and sells it to somebody else, it's a Ponzi, it's a pyramid, it's a chain letter. There are a lot of ways to describe what this is, and they've been doing this for hundreds of years, right? It's not new. All that's new is the digital part, but all the other factors have been tried and over and over again. It's just a modern version of this. And it's going to end the same way that in all these prior pyramid schemes have fallen apart. Gold is a commodity like wheat, like oil, like corn, like cotton. And people need gold, just like they need these other commodities. The difference is, gold is a better commodity to store because it doesn't tarnish, it doesn't rot, it doesn't decay. And it's relatively easy to store. I mean, it's certainly a lot easier to store gold than cattle, or oil. Of all the commodities that you could choose to store, gold is the easiest. And so that's one of the reasons that we use it. Now, is it easier to store Bitcoin? Yes, but then again, you give up the fact that you're storing something. You're storing nothing. Its value is derived from its properties. But I agree that Bitcoin is purely a function of your belief, of confidence. It's a giant con game. As long as we all believe it has value, then it can have a price and people will want it. But the question is, can you put your faith in that confidence enduring over time? That in the future, people will be just as infatuated and hold these beliefs just as strongly in the future. And I think the far off into the future you want to extrapolate, the harder it is to believe that will be the case. Tomorrow, will people stop believing in Bitcoin tomorrow? Probably not. In 6 months? Well, probably not. But in 10 years, in 100 years, the further you go out, at some point, yeah, what's the odds? And so you can't be a store of value because at any point in the future, there could be absolutely no confidence whatsoever in Bitcoin. It's to me, it's more of a fad. Yes, people are infatuated with it now because it's gone up and people have gotten rich and there's all this money being pumped into it. But who's to say that that's going to be the case in the future? I think a lot of money is going to be lost in Bitcoin. In fact, far more people are going to lose money in Bitcoin than have made money in Bitcoin.
Just so we clarify something, just using technology, ChatGPT-4, and the World Gold Council, 7.5% to 10% of gold supply every year is used for use. So 90% is memetics to 92.5%. It's we believe it to be so. Okay, so that is an element of humanity. But what you're touching on is, okay, the technology itself. There is some elements of that. If we believe it's scarce enough, we can attach a value to it. That's memetics. There is also the elements of, okay, the Bitcoin mining itself has created opportunities. So, for example, we are seeing in the Middle East using gas flare-offs, which is wasted energy, reusing that energy to create tokens, which then are used to release that. We're seeing it with load balancing. So there's an element of, it's a way of sharing electricity in a world that doesn't do that very easily. But it's also something more. The physical property here is actually the physical property of the blockchain itself. The reason this goes up so fast is not because of mania, it's because it's an adoption of a technology. It's Metcalfe's law. So what you're finding is networks, as they gain adoption, price gets a bit crazy. Now, in 20 years' time, will Bitcoin price be as crazy? Highly unlikely, because it gets to maturity and it looks more like a mature asset. So people get confused. What we're doing here is saying, what Bitcoin's price is doing is saying, yes, there's the element of memetics. It has this scarce value. Nothing in the digital world has scarcity. So this is interesting for humanity. It's not proven, it's not had 1,000 years of history. It's interesting. It also has interesting properties in how it can reuse wasted energy or rebalance energy loads. Okay, that's interesting. But also, what is the future expected value of the blockchain itself? Now, we may say today, or we would have said a year ago, well, Bitcoin blockchain is not very useful. But now we've started to see these ordinals and inscriptions, which is using the blockchain for other things. We're seeing other use cases of layer 2s built on Bitcoin. There's more incentivization in a network, the more people that invest in it or join it, to create other use cases, i.e. there's money around. There's money to do stuff with it. So we don't know what the future of the Bitcoin blockchain is. But if enough money is attracted to it, it will create other use cases because it's a network with a lot of people on it. So network value is a weird thing for somebody who doesn't live in the digital world. In the digital world, that's what's created all the value in Amazon, Google, Apple, Facebook. It's what's creating the digital, the value in Tesla. It's what the value is in ChatGPT. It's network effects. So we've got this incredible asset, which has these scarce properties that solves a problem that we had in the digital world. It has some physical properties because what we can do with electricity and how it's mined. And then it has the future expected value of the network. That, to me, makes it a very interesting asset. Now, the question is, does it exist in 50 years' time, 100 years' time? I don't know. Nobody knows. Would humans use gold in 100 years' time? Nobody knows. Just because they used gold yesterday doesn't mean they use gold tomorrow. So everything changes. People have used cowrie shells, they've used stone, they've used all sorts of things as a store of value. Bushels of wheat. That was a very common store of value back in Egyptian times. So take nothing for granted, but observe when new things are happening and we're actually seeing people using these things in different and unique ways, you pay attention. And it's driving a lot of value. That, for me, is enough. Because we're getting two elements here. We're getting the store of value plus the adoption of this technology that's driving it. Matter, but that is a future. We're not there yet. And I'm an investor at core. My job is really, to also make money out of trends. I'm trying to better my future, as we all are. And so, yes, I believe in the philosophy. That's how I got into it. I saw that this was probably a better answer for many of the issues within the financial system. Not for gold per se. Gold is fine. It will continue being gold. I have no issue with that. But it just seemed to me that this was something that was going to solve the philosophical and the real problems of the financial system, the real core of it. Who owns what in an overly indebted society? It's going to really do something there. And so, if I can make money out of a solution, well, of course I will. So, it's both. But really, how much longer am I on this planet? I'm 56 years old. Maybe I'll live for 50 years if I'm super lucky. What is my job? My job is, yes, if I think this technology is a good thing for humanity, I will help promote it the best I can. But it's also my own life and my family's life. And if I think it has investment properties that outperform other assets, of course I'll invest in it. Even with the volatility, because risk adjusted, even if you take from drawdown adjusted, volatility adjusted, whatever ratio, still the best risk adjusted reward of any asset we've ever seen. Fidelity produced this fabulous chart, which is it's a dot plot chart of risk-adjusted returns for all of these assets, and there's gold and Nasdaq looks really quite good, and etc. Right? They're all clustered, and there's a blank sheet of paper, and then somewhere up there in the far right is Bitcoin. The risk-adjusted return is alien. We have never seen anything like this. So regardless of what people say about the volatility, everything else, the risk-adjusted return is like an alien asset. We've never had anything like this, which is why, to me, when I simplify everything down, I just say this is the best macro opportunity of all time. We've got the best risk-adjusted return asset that has the highest performance of any asset in history. It's being adopted at the fastest
rate. You're looking in the rearview mirror. It may not look that way in the future. In fact, it's more likely to revert to the mean or way below the mean. Seems like if it's gone up so much in the past, there's a lot of risk that it's going to go down. I think you're ignoring that.
You see, all of these, like NASDAQ, and you're probably a bear of the NASDAQ too, but all of these things are secular trends in a logarithmic chart because they're secular trends. They're not cyclical. This is not the commodity
Bitcoin
world.
Bitcoin hasn't been around long enough to be a secular anything. It's been around for 12, 13 years, and really, it's been around, you know, in the eye of investors for a much shorter time period, maybe 5 years.
I mean, I've been investing since 2012, so I'm 12 years into this.
Yeah, you. But most Wall Street hasn't been into it that long. They got into it really, you know, 2000 time frame, around there. You know, after it really went up, they kind of got interested in it. They weren't looking at it back then.
Well, that makes me even more bullish, right? That makes me even more bullish if they haven't really adopted it yet.
No, they're in it. What do you mean? They're in it. Like, got all these ETFs now. They're in it. They've been promoting it. They've been touting it. There's been Bitcoin commercials now for years. I mean, the top advertisers on cable TV are crypto companies. I mean, they're pumping and pumping and pumping and pumping and spending a lot of money to try to con the public into buying this stuff. And so, you know, they've suckered a lot of people in, you know, but there's a limit to how much longer they're going to be able to do it. You can't do it forever. The bottom is going to drop out, you know. And as far as the NASDAQ, look, you know, yeah, I mean, there's a lot of liquidity. There's a lot of inflation. It's been driving tech stocks higher. I'm not short these stocks. I mean, I think the market could go up because I think the dollar is going to go down. But at least in the tech stocks, you know, a lot of these companies are real businesses. They may be overvalued, but they have some value. They're you know, you mentioned a lot of companies that you say have networks like Tesla or Apple, but they make a ton of money selling products, right? You know, I got a lot of Apple products myself. Apple is earning a lot of money. You know, you can argue about what the price of the shares should be, but you can't argue that there's a valuable business there. But with Bitcoin, you know, there is no business. It's nothing. It's like, you know, in sales, that, you know, they say sell the sizzle, not the steak. Well, in Bitcoin, there is no steak. It's just sizzle. So it's all being hyped up.
Yeah, it's not certainly true because the people who mine it get given block rewards. So they get paid.
Well, yeah, if you're mining it, you make some money. Sure, I'm not talking about Bitcoin mining can be profitable for now as long as I can sell it above the cost of mining it. But that's different.
But that creates
You're talking
an
about,
intrinsic
you know,
value.
selling
right?
Bitcoin
it's the
as
same
a
as
business.
See, Peter, it's the same as all mining. If the cost of production is above the price of the asset, people don't mine. And so supply is reduced. Or in this case, that the amount of hashing in the network, i.e. the security of the network gets
When
reduced.
it comes to Bitcoin, the supply is very little to do with mining because almost all the Bitcoin have already been mined. So the question is, with the 19 million odd Bitcoin that exists right now, forget about the couple of million more that they could bring on stream over the next few decades. The question is, with the 19 million that exist, or however many haven't been lost, do people want to hoard them or do they want to sell them? And if they want to sell them, is there enough new demand to buy them?
So
if not, the price crashes.
What happens if China sold its gold? Oh, the price
Why would they
would
do
crash.
that? They're
what
buying
happens
gold.
if the Fed sold their gold?
But then somebody would buy it. Somebody needs it.
This is not an argument. 10%
Yes,
of all gold supply is used for industry. So if a central bank comes in and dumps their gold, like the UK
They
did,
have dumped gold. Central banks have dumped gold
And what
before,
happened to the
and
what
it gets
happened to the
bought.
pri- and
It
what
gets
happened to the
absorbed
price?
in the market.
the price went down. And so maybe the price of Bitcoin goes down when people sell it. No shit. That's what markets do until you find the clearing price. It's normal. I don't see why it has to go to
Well, look,
zero.
you know what? One of the things that I've learned, you know, over the years with Bitcoin is it is like a religion. And people believe in it the way they believe in a religion or a cult. And when you get to that type of mentality, there's no rational argument that you can make. I can't logically try to tell somebody that there's no God if they believe in a God. I mean, it's a belief system that you have, and it's almost impossible to entertain that you might be wrong, right? So, and you know, so you believe in it, believe in it. I mean, there's nothing I can do about it. I mean, and if you end up losing a lot of money, you lose a lot of money. And the problem is, you know, some people that lose a lot of money can't afford it. The best thing about Bitcoin is that most of the people who are going to lose a lot of money are young, and they got plenty of time to earn it back, and it's going to be a valuable lesson that people learn that they can carry into their older years, the memory of all the money they lost in Bitcoin.
Could it possibly be you that learns the lesson?
I don't think so.
Okay.
I mean, maybe I'm wrong. Maybe Warren Buffett is wrong. Maybe a lot of smart investors, maybe we all got it wrong and you guys got it right. I don't think that's the case. But, I suppose anything is possible.
If people stop using the network, if there's less activity on the network, people start becoming disinterested, then it's shown that its store of value principles erode. It would be the same with gold. And that's one of the reasons gold has been somewhat lackluster, because there's been less adopters of gold in a new digital world. So it's not done as well as it would have done historically in the kind of debasement environment that we've had. So if I were to observe in Bitcoin itself, forget all the other crypto, and I'm no Bitcoin maximalist, as you all know, if we saw that people were using it less, there was less activity, less value was being transacted, less new people were joining, the Bitcoin network, i.e. having wallets, then I would say, you know what, there's something wrong here. And is that persistent over time? If it's persistent over time, then the network may not work. And we've seen many of those things happen in the past. There's a possibility that happens. I don't think it's the highest probability, certainly not this decade. Could it happen after that? Of course possible. Well, in 2022 was a great example, is the market went down 75%. The number of active wallets in crypto went up 42%. So adoption was still ongoing while price went down. Activity was less. But then we're seeing, okay, so if we step back and we hear, governments are going to build on blockchain rails, CBDCs. All the banks want to put assets on blockchain rails. We're hearing gaming companies want to put these metaverse gaming experiences on blockchain rails. We're hearing, I was at one of the world's largest commodity trading firms in Switzerland last week, speaking to one of their senior agricultural commodities physical traders. And I'm like, and she's an investor in my digital asset management company. And I'm like, are you guys using blockchain? Surely you should be solving supply chain. She goes, we've been using blockchain since 2021. So we're doing 8, I think, of the world's largest agricultural commodities houses are putting their letters of credit, their shipping, their all of the kind of transit proofs, the supply chain, and the settlement all on blockchain. So, going back to your question, Tom, when I see this and I see the price of Bitcoin down 75% or the whole crypto space down 80%, you say, I have to ask myself, is adoption stopping? Or is just this a cyclical factor that's driven by the business cycle? And until I would see otherwise, unless these things go away, then I can only assume that tomorrow is more digital than today. And tomorrow, more people will use blockchain technology than they did yesterday. Simple as that.
It hasn't been changed yet. I mean, I've been watching Bitcoin from a few dollars a token to 60,000, right? So price obviously isn't going to do it. The whole time I've been observing Bitcoin and involved in interacting with the whole community, and I've seen it grow, and I've seen more and more people believing in it and speculating on it. But what I haven't seen is a use case. People make a big deal about, Peter Schiff, Schiff Gold, we accept Bitcoin. Well, we started early on with working with BitPay, where we enable people to take their Bitcoin through BitPay, and BitPay just lets you sell your Bitcoin kind of point of sale and get dollars to buy gold. But I haven't seen any real increase. It's a tiny part of our business. Every once in a while, somebody buys gold with Bitcoin. but they don't actually buy it with Bitcoin. They sell the Bitcoin and then they buy the gold with dollars. But I remember back in 2017 when Bitcoin kind of popped on everybody's radar for the first time, because it kind of went from obscurity and it had that big run to 20,000 from under 1,000. All of a sudden, people start talking about it. A lot of companies started to announce, "Oh, we're gonna sell products in Bitcoin. We're gonna accept Bitcoin," and there was like a rush of that, and that all went away. I mean, nobody today is talking about how they're taking Bitcoin. I mean, the only company, AMC, the movie, the meme stopped for a while. Stock, they said, "Oh, we're going to take Bitcoin at our theaters," just part of the mania. That stock is down like 99%. Since that I got hyped up. Elon Musk announced at one point he was going to sell cars for Bitcoin, and I don't know how many months later he pulled the plug on the whole thing and said, "No, we're not doing it anymore." But so we haven't seen that adoption. It hasn't become any more of a currency than it was when it was first created.
That's a very fair thing. It hasn't, because the problem is it keeps going up, so you're disincentivized to sell it, or it's very volatile, right? It's not very good as a currency.
Well, it's not very good at the main thing it was designed for. But and I remember when I first heard about it, when I first heard about Bitcoin, the way it was sold to me was, hey, you can circumvent all the AML requirements. You get out of the banking system. You can transact anonymously in private, and you don't have to worry about the government spying on you. You can be out of the banking system.
I got into it for an entirely different reason, which is, as Dan Tapiero would call it, it's the security truth machine. It's the value of the ledger. It's the value of having a new way of creating trust in the world. In a world where trust is broken, you don't know how much gold the Federal Reserve has, right? This is a trust problem. We've got the same trust problem with the futures
Bitcoin
market.
Doesn't have any. I've been given the same answer for 10 years. What will prove me wrong about Bitcoin would be if Bitcoin replaces the dollar, the euro, as a currency. When I go to the grocery store, and not only does the grocery store accept payment in Bitcoin, but all the prices are in Satoshis.
But do we do that with gold,
that my
Peter?
landlord
That's a bit
takes
unfair,
Satoshis.
right? Have you gone to the supermarket with a gold bar?
No, because
tried to buy a
gold.
bag of
All right.
chips?
No, but gold is not being used as money right now. It's being used as a commodity. It's being used as a metal. Bitcoin can't be used as anything. So it has to be a currency. It was created to be a currency. So let me see it function as a currency. It hasn't done that at all since it was created.
You're applying a different set of standards, my friend.
No, I'm not. It's like you're also asking me what would have to happen for me to believe that Santa Claus is real. I don't know. You're asking me. It's a fake asset. It's phony. I can't imagine what could happen to convince me that something that isn't is. It's the more question is what gets you to stop believing in it, because you're the one that believes in a fantasy.